This is the first MTPredictor Weekly Market update for the new year, January 6, 2013. And again, let's start with the S&P on the daily chart. I got a little bit of ground to cover. I was doing a lot of traveling in Disney World and everything else over the holidays, so I apologize for my voice in advance. Battling a bit of a cold here, but let's kind of take a look and see where we were. Remember, if you've been watching these weekly market updates, we had our 5-wave pattern down, and therefore we're anticipating a correction back to this wave 4 DP, which is typically a pattern that repeats over and over. And I was anticipating we'd achieve this target around that 1440 area. This is the new March contract in the S&P here, the futures. We'd achieve this in by Christmas, and I think the last weekly market update we were somewhere in here, and looking for that to finish off. That heading into options expiration week, I think that was the last title of the last weekly market update. Looking for a potential rally, as is the tendency during the options expiration week, to kind of finish this off. We achieve that. Again, this is a resistance area, so we would then expect that the market, you can see we've got a red seller's candle there, market should sell off. Now, at this point, you can see, if I put the analysis on here, that we've got a potential wave. Well, here's 1 or A, 2 or B. We'd be looking at this as a wave B. We can project up wave C, and we talked about this before. This is what we would be looking for, is an ABC correction from this first move, as we'll look at the weekly chart to show you why I was looking at this. So anyway, the market did rally right into the minimum wave C. So now we've got an ABC correction here from this initial down move. So let's look at the weekly chart. So remember, on the weekly chart we had our major 5-wave pattern up here. So this was a significant high. All right. Here's our wave 1, potential wave 1. This we were looking at as a potential wave 2, and then it's now, you can see the ABC pattern, because what's happened is we were looking at this as a potential wave 2, and then if this high was not taken out, we could be looking for wave 3 down here. Well, what happened last week is they did in fact trade and take out that high of 1461.75, and we achieved what was that, 1463. So they did trade above that, which nullifies basically that pattern on the S&P here. So the boss, as we call it, the most liquid, the largest of the at least the NQ, the Dow, and the S&P here, has made a bit of a statement here. We can look at the next resistance area, take a decision point off of that high, and we can see that that will come in right around just about 1480, just below 1480 anyway. Now, what we have that's interesting, we're going to look at the other markets here in a second, because, well, let's do that now. Let's look at the Dow here. So here's the weekly chart of the Dow. Again, we had the same 5-wave pattern up, as these markets typically like to move together. And so we had a significant high here. In fact, the software in the Dow here told us we had a potential top here with divergence. So we had a higher high in price, a lower high in the oscillator, so we had divergence up here. So again, a 5-wave pattern up. Typically we would anticipate the market to correct back to this wave 4 DP. Now you can see the Dow has diverged from the S&P in the sense that it did not achieve or trade above that wave 5, its prior wave 5 high in this weekly chart here. So this pattern is still intact, and so we could be looking at a potential wave 2. Let's just see if, let's just project wave 3 down here. Now, like I said, the ES is the boss. All right, so you can see there's the wave 1, the wave 2. Wave 3 would be basically a correction back to the wave 4 DP, all in the same area. And that's, you're looking at 11,000, around 11,500, 11,600 area. Yeah, right here. So that, again, this is only 30 stocks that make up this index, as opposed to the S&P, which I call the boss, because it's the most liquid, and it's it's 500 stocks as opposed to 30. But let's look at the NQ now as well. So the NQ also had a major sell signal with new high here, lower high in the oscillator, divergence. Again, these DPs look for market tops. The pattern you can see is the same, 5-wave pattern up. The tendency then is after 5-wave pattern up, you get a correction back to this wave 4 DP. And let me just remove that for a second here. And so let's just see if the this is another potential. Obviously, haven't been able to take out that prior high like the S&P has, and so if this kind of unfolds, well, let's just see on the daily chart if that is an ABC correction. On the well, it's a little, yeah, it's a little not very pretty there. So let's just go back to the weekly chart. But let's look at this. Let's project wave 3 down here. Alright, so there's the potential, wave 1. We would look at this as wave 1 because this is a significant wave 5 high. Wave 1, wave 2. Here's your wave 4 DP again. Let's just put that in there because that will be a in between where the wave 3 would come in, which would be down at 21.15, 21.17 it looks like. Alright, so these patterns we still have to watch out. It's kind of 2 against 1, but the 1 is the boss. So what I want to see now is, even though we've traded above this high and violated that, we haven't closed above it yet. It's still, we can't call this wave 2 anymore because it's taken out this high, but it is still I'm not giving up because the other two markets are lagging here, that even though this traded above that high, we could still see downside in this area. But here's the next resistance on the S&P, around 1479, 1480 area. What I would look for here, that area is fairly close to where we're trading now, but if we get a close above this 1461.75, if we get a close above that, and then whatever the high is, if that gets taken out, if that gets traded above, then we'd be looking to the, well, we've got, like I said, probably this let's say we'll call it the 1500 area. Nice round number there. And then if they take this area out, we've got to recalculate, find the next areas of resistance, which we're going to have to go back quite a ways in time to find those areas. But it is what it is. It's kind of a uncertain picture right now because, like I said, they're not all in sync. We've got one market that made a new high last week, 2 markets that were did not, and so there's still danger to the downside from that standpoint. S&P looking stronger, and it is the boss, so we'll see how those finish out. Let's take a look at some of the other markets here. Alright, let's look at, here's gold, and we can see obviously gold has had a nice sell-off as far as the daily chart is here. You can see there was a sell signal. It wasn't a standard sell signal there because the STF was to the long side there. What was the pattern there? So you did have a 5-wave pattern up there. So again, we would anticipate the market at least correcting at that point back to this wave 4 DP. It did that. We got a buy signal here with the trend. Right, there was a target, but in between an ABC pattern developed here. Right, our STF was neutral, and so it was a valid sell signal to the downside here. It was quite a healthy target of 8R that was achieved, and here we sit. And a lot of people are kind of panicking, especially with the comments that the Fed minutes brought in about some dissension in the Fed. Some of the Fed governors worried about the effects of these asset purchases long term, and this stuff going on, and the Fed saying potentially could be ending asset purchases before the end of 2013. And of course we saw the markets sell off. We saw gold and silver sell off pretty well. Are they going to be able to discontinue asset purchases? Well, not unless they want everything to really just fall apart. So I don't know if it was some kind of ploy to keep metals in check, or whatever the case may be. It is what it is. These markets sold off, but we had a pattern there, and the software told us it was a valid sell signal here, and the market did achieve the target. But let's just take a look at a little bigger perspective to see where are we. So here's gold now in the longer term chart. This is still the weekly chart, but I've got more data here with our 50 period moving average, the red line here in the 200 period. And again, typically we see the fact that gold, silver has been in a 10, 11, heading into 12-year bull market, and typically when gold price has come below the 50 period but above the 200 period, it's been a good buying opportunity. So you see we've had a couple of dips below here, a new one here below the 50 period but above the 200 period. And let's just kind of go back here. Any other periods that we see a similar situation? Well, you can see we're trading above some nice buy signals here. The software is giving us all with the blue uptrend here. Again, here's your 50 period, your 200 period below that. Another opportunity below the 50 period, above the 200 period. Now this was the crash of 2008 here, and this was one of the times where the price actually came down to the 200 period itself. We got a nice buy signal there, and the market resumed the uptrend. And a lot of this was probably due. Right now gold and silver are kind of trading in tandem with the the S&P, let's say. That's not always going to be the case. All right, but a lot of this was people selling gold and silver, cover things like margin calls when the market was crashing in 2008 and so forth. So I think a lot of this move was due to that. But anyway, 200 period held there. Again, this was back in 2008 heading into 2009. And then, again, look at this period here where the market came below the 50 period, came below it again. We got a buy signal there, again. So we had a series of 1, 2, 3, 4, 5 dips below the 50 period, still above the 200 period. Again, ended up being good buying opportunities. And again, we can go all the way back, another below the 50 period, above the 200 period. So long as this is in a bull market, that is going to continue to be the case. We can even see pullbacks as we saw in 2008 to the 200 period. But as long as this holds, it doesn't get taken out to the downside, then things, this, again, here's below the 50 period, above the 200 period. And the cross here happened. This was basically after 9/11. All right, so you can see this is still intact. Gold is still in. Even back here when the market crashed, there was no reason to panic. Obviously, we got down to the 200 period. If this gave way, that'd be a different story. But that hasn't happened. So again, this period we've got 1, 2. This is our third dip below the 50 period. So we'll see how this unfolds, but you can see the rising 200 period here. So I guess what I'm saying is, bigger picture, don't be alarmed at this point with gold. If you're a long-term buyer, the threats of them discontinuing QE or asset purchasing or whatever you want to call it is going to shake a lot of people out of this market, I believe. and we may not be done with the downside. And we could see this 1400 area in gold and still really, have a situation like this, and the uptrend still really be intact. So, bigger picture anyway. Obviously, if you're a short-term player, we're not talking to you here. All right, and so this analysis, the same thing for silver. You can use this gold chart really to time your purchases of silver, which is what I like to do, because it's a much cleaner chart. Silver is a smaller market, much more volatile, but you can use a gold chart to time your purchases long term for silver. All right, let's look at oil here. And so here's oil on the weekly chart. Again, here's that $80 area. Here's that, around that $110 area that we've been staked out. We did get the, the buy signal here. It's a valid signal. Put the analysis on. You see the target there, right around $100. And so this may be a little early. We'll see if they, get to the target. Obviously, that's fine. But typically, you can see. Look at the bottoms coming right into that $80 area, and so it wouldn't surprise me if we do come down. It certainly could. The rally just could start from here, at least back to the potentially $110 area. From here, we've seen that before as well. If we go back a little further, you can see, well, the little rally here, and then came back, but it had already achieved that point here. So we'll see. Again, it's a valid trade setup. At this point, we'll see if it gets to the target or not. If you did take this and you moved your stop to break even, let's see, it would have taken you would have already stopped on it. But we'll see if it does go on to the target there, or if it does roll back down and actually hit that 80, get into that $80 support area. So we'll see. Again, this has been in that $80 to $100 range, for quite a while. Again, this is the weekly chart, so that's been the pattern there. So watch for that. Wouldn't be, obviously not going to be surprised if we rally to 100, 110 from here, but also wouldn't surprise me if we, do something like this in here. So we'll watch for that. And then finally, let's look at dollar and euro, US dollar. Okay, so the euro US dollar here. There's a TS3 sell signal in here. It's a valid signal. If you short the Forex pair, this is, you'd be at 31.42. The 100% initial risk line is at 29.76, where you can move your stop down if you're into that. There's the target. But if we look at our pattern back here, it was our 5-wave pattern. Again, typically we expect a correction back to this wave 4 DP. Hasn't achieved, doesn't mean that it can't do this, but you got to be careful that it's retracement may come back up into this area. If we look at the dollar index, again, here was our major bottom here that we were looking for. Didn't quite reach that 84, 82 area. You see it's rallied a bit. This is where we've seen the euro selling off a bit. We'll see if the dollar can continue to be strong and eventually get back to that 84, 82 area. Maybe with the selling of gold and silver, this gains some strength, finally gets some momentum, but we'll see if that can finish. So we went a little long tonight, but or this morning anyway, here Sunday, but had a lot of ground to cover, hadn't been off for a few weeks, so hopefully that helps. Oh, and before I forget, I don't typically, as you know, do any promotion of the software and stuff. Obviously, we do sell the software to private traders, money managers, hedge funds, and the like. But we rarely discount the software. But a couple of times a year, we do have a promotion. This is our New Year special. We won't have a promotion this with a discount this size again until our anniversary, which is in September. So if you're interested in the software from January 1st, obviously it's past that now, January to January 11th, which is a Friday, I believe, you can get 20% off any new purchase. That's our MTPredictor add-ons for Ninja 7. Our standalone version 6.5, which runs on either eSignal or IQ feed. We're getting ready to upgrade that version to 7.5, and that'll have some additional data feeds, Zenfire, I believe, FXCM for the Forex data, and maybe a couple others in there. The professional trader package is our MTPredictor add-ons for Ninja 7, plus our new trade module, where you can actually, the software will, with a click of a button, execute the trade, the entry, the stop, the correct position sizing, the target, and then manage the trade for you. If you want to take advantage of that, you can just send me an email, john@mtpredictor.us, and I can send you the links for that. Check out the website, mtpredictor.us, as well. And then finally, let me just show you the, we record, these are simply the standard, what we call standard trade setups, without doing any additional analysis of our MTPredictor software. This is the Dow mini contract. Since we started our trading, which has been a couple years now, it's just taking the standard trade setups that the software provides, doing no additional analysis. So the software gives you the entry, the stop, the target, the correct position size. This was starting with a $20,000 account, 2% risk on that $20,000. So the last couple of years, you can see it's returned a little over 130% after commissions and slippage. So it's just about 100% in 2011, and just over 30% in 2012 have been the returns there. And last year's return around 30%. If you check, I think that some of the top hedge funds, as of November of 2012, were all right in that 20 to 30% for the year after expenses. So right in the ballpark there anyway with what's going on. So anyway, I'll have these numbers posted on the website. 2011 is posted on the website. I've got an update for 2012 for the new numbers here for last year. So you can check that out and take advantage of the discount on the software here. All right. Again, appreciate you tuning in, and we'll see you back next week.